Can we make new highs if tech doesn't resume its leadership role in anywhere close to the degree that it had?
As long as tech is a market performer. If tech actually declines, that's going to be hard for the rest of the S&P 500 to compensate. But what we've seen so far, including days like Nvidia and Tesla recently, is that tech is actually holding its own, but other stocks are starting to show catalysts and signs of life.
Yeah. What about the broadening trade? I mean, look, you look at the Russell, your big call, of course. Week to date's down more than 1%. Really hasn't done much at all. I kept hearing, hey, you got to wait till the Fed cuts. Then you go into the Russell. I don't know. What do you think?
Well, Russell had a big week last week. It's some profit taking now, but I think that there's, this is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020, in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small caps.
And you're still not necessarily sticking with the 50% up for small caps, but you still think they could have a huge move because they tend to move quickly.
That's right. I think what investors have to remember is small caps have been out of favor a long time, and they are known for having explosive rallies that are not abnormal. So last year was a 27% rally over really 20 trading days. I think we could see something very big between now and year end. I was hoping it would be after the Fed started the rate easing cycle, but maybe it really has to happen after Election Day. But are the fundamentals getting stronger for small caps? Absolutely, because interest rates are falling, merger activity likely picks up, and the median PE of a Russell 2000 stock is 10.7 times. I mean, that's not demanding, especially if we're trying to be sensitive to valuation.
All right, we'll leave it there.
In the world of stock market marvels, there's a giant making waves so big it's almost impossible to ignore. Buckle up, folks, because it is none other than Nvidia, the titan of the AI industry, capturing headlines with jaw-dropping performance figures. Over the past 5 years, Nvidia's stock has skyrocketed by an astonishing 2,700%, positioning itself as the leader in the rapidly expanding artificial intelligence market. And it's not just sheer numbers causing a stir. CEO Jensen Huang has dubbed Nvidia the on-ramp to the AI universe, indicating the company's pivotal role in shaping the future. But with their upcoming earnings report on November 20th, can Nvidia continue this meteoric rise, or are investors in for a surprise? Let's delve into the numbers, the expectations, and the hype surrounding Nvidia as it charts a course through the stock market stratosphere. Welcome back, everyone, to Investocracy.
Gosh, it's a top 2 position, I think, for you. We're going to have to wait until November 20th for earnings, so we got a minute to wait there. What's your read here? What's your take on Brin buying more up here?
Well, I always root for Brin, but I would just say we know AI spending has been and should continue to be explosive. The question is, how much is already baked into the expectations for the stock? You're talking about a company that out of the last 5 years has had a triple-digit return, stock return, in 4 of those 5 years. You're basically talking about a company that over the last year has grown its earnings per share by 415%. It's grown its sales by 195%. And investors have gotten accustomed to that kind of eye-bulging, eye-popping growth. And it's just hard for me to understand where that's going to come from. We already have the expectations based on all of the other Mag 7 names and the hyperscalers that are going to be doing this sort of investing. We know that. We also know that there has been a global push for companies to experiment with AI, incorporate AI, et cetera. So who's left? Is Jupiter and Mars going to start contributing here to the forward guidance? So that's the risk. I don't necessarily think that it has to be feast or famine. There's a universe in which Nvidia reports great numbers, the stock doesn't rally, but doesn't get killed either. It's just a massive company with already embedded huge expectations, and the gains of the past are unlikely to be repeated from here. Doesn't mean there's not another 10% or another 15%. I just think it gets harder from these levels, and I'm saying this as a long. So
No,
I'm
I hear you.
in the name.
At the heart of the buzz surrounding Nvidia's recent performance is the company's dominance in the AI chip market. With a commanding 80% market share, it's no surprise that analysts and investors are keeping a close watch on this stock. Now, if you're wondering how Nvidia managed to leave such a significant mark, think of it as owning the most popular pizza joint in town. Everyone wants a slice, from tech behemoths like Amazon Web Services and Google to innovative startups eager for a taste of that AI capability. CEO Jensen Huang, speaking on the brand new BG2 podcast, highlighted Nvidia's strategy and growth prospects, likening the company to the essential gateway for all things AI. Investors are currently on tenterhooks, eagerly awaiting Nvidia's third-quarter earnings report. Historically, Nvidia's post-report stock movements have uplifted investors' spirits, showing gains in 6 of the past 8 quarters, sometimes sparking rallies that would make a roller coaster jealous. But of course, the stock market has its own way of delivering surprises more unexpected than a hat trick on the roulette table. Let's face it, if stock market investing is akin to a game of chess, Nvidia's consistency is like an undefeated grandmaster plotting a winning strategy. A feat characterized by its robust double-digit revenue growth, even as triple-digit earnings growth became increasingly challenging to maintain, given their burgeoning revenue base. Yet, it's not just past achievements fueling Nvidia's current allure. The upcoming launch of the Blackwell architecture promises performance unparalleled in the industry's history, setting the stage for Nvidia to further cement its leadership and power its growth forward. Demand for these next-gen processors is so fervent that company insiders say it surpasses supply. The buzz is real enough to score its own standing ovation. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. Until we post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
No, you're big in the name. That's why I went to you next. Weiss, you're in the name.
Yep.
Is there more near-term risk in this name now, given the run that it's had, as I said, the timing of Bryn buying it here? Just give me the way that you would observe, doing this now.
Well, just mathematically, when you're coming up to an event that's catalyst for the upside or the downside, given the performance you cited, there is more risk. But that's short-term risk. And Bryn buying it now, I'm sure that regardless of what happens this quarter, if you look out a few months, she's going to be happy she did. So it's always difficult to pick the timing on buying a name or adding to it, and she's adding to it, hadn't been there for a long time. So clearly right now they are in the sweet spot. And clearly, they can't meet the demand that they're seeing from customers and want-to-be customers. So it's a great thing to do. And as I mentioned, I think a few weeks ago, the fact that Jensen Huang has been so visible and talking about demand, he's got to deliver. And him not be anything but a foolish person, I believe he knows it's going to be a great quarter. Now, what the whisper numbers get to be when numbers move like this, who knows, but who cares?
Bryn
That's
sort
a moment in time.
Makes the point, too. That, the factor of momentum is a very, very powerful. It's a very powerful thing.
But I'd also say that Taiwan Semi is the direct, perhaps the most direct beneficiary of the strength in Nvidia. And they announced on their Phoenix fab, right, that yields are 4% better than their Taiwan fab. So that is powerful. That stock's had a good move, but I still think it's going to have a great move. Over a 4-year time period, if you look out for 23 to 26 forward earnings, they'll have doubled revenues, right? They'll have doubled earnings. That's tremendous performance. Not quite NVIDIA-like, but I also think it's much more sustainable.
Why is there a willingness, Jim, to get into a name even after a run like this? Because when you look at, as we get ready for mega cap earnings next week, the bulk of earnings growth in Q3 is going to come from tech and comm services. Now, the mega caps need to deliver. The bar is high. But when you look at the earnings growth expectations, as I say, tech and comm services are expected to lead the way. Tech up 15.2% earnings growth in Q3. Comm services up 13.5% in Q3. You take those out, and where do you get earnings growth out of the rest of the S&P 500? Down 0.2. So this is the show. It will continue to be the show, and there is no trepidation from Bryn buying a name like Nvidia 3 weeks or so, 3-4 weeks ahead of its number.
Just on the Nvidia, before we get to the earnings, you covered the momentum. Josh and Bryn covered the fundamentals. There's one other aspect that I think we need to cover, which is the seasonality. When you have this big a year, anyone who's behind their benchmark is going to play panic time to catch up. And how do you do that? You throw money at the winners like Nvidia. It is likely in the next couple of months to go higher along with the market, because that's the easiest way for professional money managers who are behind to simply catch up. And also, by the way, a retail investor isn't going to want to sell this. I advise retail investors. I wouldn't tell them to take capital gains right now.
Now let's sprinkle in some joy. A quick chuckle for market enthusiasts. Why did the Nvidia chip attend therapy? Because it couldn't keep up with its processing power. Jokes aside, Nvidia's financial machinations are anything but overwhelmed. The company's gross margins reside comfortably above an impressive 70%, fortifying investors' confidence in their profitability prowess. Supporting these gusts of optimism is data from formidable sources like Bank of America, which recently escalated Nvidia's price target to $190. This forecast mirrors Nvidia's ability to tap into an expanding $400 billion AI chip market and demonstrates the company's potential in securing deals with cloud luminaries like Microsoft, Meta, and xAI. Looking forward, analysts predict that Nvidia's fruitful endeavors might translate into a whopping $84 billion in revenue by fiscal 2025 from their AI operations, underscoring monstrous growth and laying the foundation for potentially capturing a substantial segment of the AI accelerator market projected to hit $280 billion by 2027. One thing's for sure, even as Nvidia gears itself for sky-high aspirations, the horizon remains both dazzling and promising, possibly justifying the increasingly enthusiastic investor interest that Nvidia continues to command. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Start off with Nvidia's record run this week. The AI darling stock ending the day just short of all-time highs, up more than 16% this month. The chipmaker also briefly topping Apple in market cap today. The world's two most valuable companies neck and neck ahead of a big week for the tech trade. Most of the Mag 7 stocks gearing up to deliver results. Alphabet, Microsoft, Meta, Amazon, and Apple all on deck. So will next week be the moment of truth for big tech and the AI trade? Can the reports feel even more upside ahead? And I guess people will say, what are they going to spend? And is it going to prove that Nvidia's market cap, Nvidia's PE is worth it, Tim?
Well, that is the question. And I think we've talked about that a lighter CapEx load might actually be something to rally the mega caps on, because I just think at times, especially we know with Meta that the year of efficiency led to a lot of gains. People have been concerned. I think with Google, who's going to report on Tuesday, I mean, there's a dynamic here that I think there is some need to see some follow through here. I think ultimately, as we go into this period, if you look at the NASDAQ 100 or the triple Qs and the Mag 7, obviously outside of Tesla, which has been on a tear, have not made new highs going all the way back to July, whereas semis have retaken some leadership. If you look at that period from September 9th, or there's been a couple different periods I think the market has used to both rotate out of growth back into value and this and that. But from September 9th, or shortly after we got that payroll number and some reaffirmation of the consumer and the economy, you actually saw the growth come back in the semiconductors and that leadership. They've outperformed the S&P by almost 7% just since September 7th. And will they make new highs? We haven't made new highs on semis also since July. But I get the sense that's where we are. And I think everything we're going to hear from the hyperscalers is that this is a very important part of, again, that prisoner's dilemma. They got to be there.
Yeah. Following?
As Nvidia prepares to reveal their third quarter earnings, the stage is set for potentially monumental movements within their stock market trajectory. With eyes wide open, investors assess the fine print in the demand for Nvidia's Blackwell architecture against an impressive backdrop of historical gains and analyst forecasts. The current share value hints at room for further growth, particularly with Nvidia being well-positioned at the epicenter of the AI explosion. Though the market can be as unpredictable as a cat on a hot tin roof, all indicators point toward Nvidia's capacity for sustained progress. The company's existing dominance is fueled by innovation, unprecedented demand, and an anticipation of what's to come. Forward-looking statements about major revenue, influxes hinted optimism, not just for immediate returns post-earnings, but a confidence in Nvidia's ability to navigate future market trends with flair. Should you're considering a foray into the AI stock realm, embracing Nvidia might just be an opportunity. It's a rare mix of high-tech and resilience trading at an attractive forward earnings multiple. But enough guitar solos. It's time we heard from you. What's your take on Nvidia's trajectory? Are you on the brink of adding this tech innovator to your investment portfolio? Or do you see competition on the horizon? Let's discuss. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.